Estonia is a small country. Its entire economy produces around 30 billion euros a year. So consider this. Between 2007 and 2015, a single branch of a single Danish bank in the Estonian capital of Tallinn processed 200 billion euros of money from non-resident customers, Russians, Azerbaijanis, shell companies from the British Virgin Islands with no business in the Baltic and no plausible reason to exist. 200 billion euros through one branch of a bank whose headquarters in Copenhagen prided itself on Scandinavian transparency, social responsibility, and the lowest corruption rankings on earth. It became the largest money laundering scandal in European history and the most uncomfortable because it happened in the place that was supposed to be cleanest. This is the story of Danske Bank. The machine was inherited, not built. In 2007, Danske, Denmark's largest bank, bought Finland's Sampo Bank, and tucked inside the deal was a small Estonian branch with an unusual specialty, serving non-resident clients. Wealthy customers from Russia and other former Soviet states who wanted their money inside the European Union, denominated in euros and dollars, beyond the reach of their home jurisdictions. The portfolio was tiny by Danske's standards, a few thousand accounts, but it was astonishingly profitable. In some years, this one branch, with its non-resident niche, produced more profit than all of Danske's other international operations combined. Returns on the non-resident portfolio ran at levels an honest banking business simply does not generate. That should have been the alarm. In banking, as in geology, an impossibly rich vein usually means someone has salted the mine. Even before the ink dried on the acquisition, the warnings began. Russia's own central bank wrote to Danish regulators in 2007, warning that clients of the Estonian branch were suspected of tax evasion and criminal financial transactions on a permanent basis. The letter was noted, filed, and effectively forgotten. The branch kept its own IT systems separate from Copenhagen's, meaning the Estonian accounts were never integrated into the group's anti-money laundering monitoring. Headquarters could not automatically screen what the branch was doing. For 8 years, that did not strike enough people as a problem worth fixing, in part because fixing it was expensive, and the branch was a gold mine. What flowed through Tallinn was the bloodstream of the post-Soviet shadow economy. Investigators later mapped the branch's customers into categories with names like the Russian Laundromat and the Azerbaijani Laundromat, industrial-scale schemes already exposed by journalists, in which money moved out of Russia and Azerbaijan through chains of shell companies, fake loan agreements, and courts in Moldova, before arriving, scrubbed and respectable, in Western accounts. Roughly 10,000 non-resident customers pushed through their 200 billion euros in 9 years. Many accounts were registered to limited liability partnerships in the United Kingdom, paper entities with nominee owners, the legal equivalent of a ski mask. The money bought what such money buys: London property, luxury goods, influence. Strands of it touched the family of Azerbaijan's ruling elite and payments connected to lobbying in Europe. Some of it traced back to the tax fraud uncovered by Sergei Magnitsky, the Russian lawyer who died in a Moscow prison after exposing it, which meant Danske's Estonian branch was not handling abstract dirty money, but money with a body attached. The man who tried to stop it was a British trader named Howard Wilkinson, who ran Baltic markets for Danske from Tallinn. Between 2013 and 2014, Wilkinson sent 4 whistleblower reports up the chain to Copenhagen in writing, with exhibits. He had found UK-registered shell customers whose filed accounts claimed they were dormant while moving millions of dollars a day through their Danske accounts. His first report named an entity whose listed owners included relatives of Vladimir Putin and the Russian Security Service. He wrote, in effect, "The bank may itself be committing a criminal offence." The reports reached senior executives. An internal audit confirmed core allegations in 2014. The branch's non-resident business was not shut down until 2015, and even then quietly, with no report to the markets and no confession to regulators. Wilkinson resigned. The bank's executive board, as late as the annual reports of those years, described its anti-money laundering posture as robust. The unravelling came from outside, as it almost always does. Danish newspaper Berlingske, working with the Organised Crime and Corruption Reporting Project, began publishing the Estonian transaction data in 2017. Each story raised the estimate, first billions, then tens of billions. Danske commissioned an independent investigation by a law firm, and in September 2018 the bank stood before the world and read out the number itself, 200 billion euros of non-resident flows, of which the bank could not determine how much was illicit because its controls had been too weak to tell. The report's language was clinical and devastating. The vast majority of the customers were deemed suspicious. Chief Executive Thomas Borgen, who had personally overseen international banking, including Estonia, during the peak years, resigned the same day. The chairman followed. The branch was ordered out of Estonia entirely by the Estonian regulator, an expulsion without precedent. Then the prosecutors arrived in 4 countries at once, and here the story darkens further. In September 2019, Ivar Rehe, the man who had run the Estonian branch during the Laundromat years, was found dead in his garden in Tallinn after a 2-day search. Police ruled it a suicide. He had been a witness, not a suspect. The scandal now had a second body. The reckoning, when it finally arrived, was historic. In December 2022, Danske Bank pleaded guilty in a United States federal court to bank fraud conspiracy, admitting it had lied to American banks about the state of its Estonian controls, lies that kept the dollar pipeline open, because every dollar transaction in the world ultimately clears through New York. Danske agreed to pay roughly $2 billion to American and Danish authorities. It remains one of the largest money laundering-related resolutions ever extracted from a bank. Borgen was charged in Denmark and acquitted in a civil ruling. No senior Copenhagen executive has gone to prison. The shareholders paid the fine. The customers had paid the fees. The money, 200 billion euros of it, had long since dissolved into the world. The epilogue belongs to the system rather than the bank. Danske proved that Europe's anti-money laundering architecture was a paper fortress, national regulators guarding national borders while the money moved continentally, a Danish supervisor assuming Estonia was watching, an Estonian supervisor assuming Copenhagen was responsible, and in the gap between assumptions, the largest laundromat in history running at full spin for 9 years. The scandal, together with its echoes at Swedbank and other Nordic banks, where similar Baltic flows surfaced within months, pushed the European Union to create its first central anti-money laundering authority. As with every reform on this channel, the watchtower was built after the raiders left. The most honest sentence in the entire affair came from Howard Wilkinson, testifying before the European Parliament. He reminded the room that the shell companies he found were not Estonian or Russian inventions. They were registered in the United Kingdom. the laundering disguised behind the respectability of Western law. The dirty money was Eastern, he was saying, but the laundry was ours. Denmark spent decades atop the world's anti-corruption rankings. Its largest bank, meanwhile, ran the biggest washing machine in European history out of a side office in Tallinn, profitably, knowingly, and with the paperwork filed on time. Clean reputations launder best of all,